Hi everybody, this is Gary Dean, and this is another video report for Monday, March 13th, 2017. Sorry about missing the report yesterday. I was out of town in a wedding and got back later than I thought. Anyway, let's get started. I'm starting off with some of my stock charts because there's some things that I want to go over and show you that things that really aren't making a whole lot of sense, but we've seen it before. And typically, what happens is it, kind of builds up before some kind of dramatic move comes in the market. And what I'm showing you here, this is the VIX down here. This is the S&P. Now, when you keep the VIX compressed down in these support levels, and the longer it goes, the bigger the move is to the downside on it when it pops out of it. And we've been stuck in this support level, basically all the way from November to where we are now. So if history is going to be our guide, we are going to get one of these type pops, or maybe even one of these type pops, because just the length of time that it's been down here. Now, the thing that I was talking about, where sometimes the markets don't make a whole lot of sense when you try to add up stuff, and seeing the S&P was basically even today. Nasdaq was green and the Dow was red. That does not call for a 2.5% drop in the VIX. So it's telling us that there's nobody worried about any pops in volatility, and that is pretty much when stuff like that happens, is when people start throwing any kind of protection out the window. And the S&P, from where it was from the top here to heading down, the VIX is pretty much right where it was. So nobody's really panicking at all on this, and that's typically what forces panic, is when nobody's really expecting it. So again, the VIX being down 2.5% today, it just was very, very strange to watch. You would think that the S&P was up 10 points or something if you were just going to be looking at the VIX. So again, that's something to me that doesn't really add up on it. And eventually it usually plays out with the VIX having some kind of spike where everybody starts buying protection at once. So let's just move to the other charts down here. And the reason why I'm going to show you my regular charts, but this just gives you a cleaner view as far as with wave counts. And really what I'm looking for is this wave 3 to end right here, and it's going to do it in a 5-wave format, which is in the red. So once this completes, we should get a wave 4 that's either going to come down to the, say, the 2100. More likely, it could come between the 2100 down to the 1800, which is the previous 4 right here. You can see. So that happens a lot. Is it comes down and goes to the previous 4, and then heads back up and makes new all-time highs with the 5. So that is that's what I'm kind of anticipating is going to play out. Now, the first move, it may come down and then bounce back up and then come down again. It's not going to be just a one shot move coming all the way down here. It's going to, trying to chop around. But eventually, if it ended up down here, it would make perfect sense, because that would be where the other 4 is. And that may not come until the end of the year. I'm just saying this is what would be the best count that I see. So if we're looking for that wave 5 of the 3, this is just a wave count from November, and you can see that either this is your wave 3, and I'll show it on the other charts on it, but eventually what we're really doing is we're waiting for this wave 5 to end, and then that will be the this right here, and when it should be the start of the larger drop that's anticipated. So there's some gaps that are above right here. I don't know if they're going to try and close them beforehand. What I mentioned in the morning notes is, the bulls like to try to grind things higher heading into Fed meetings, but this one's a little bit different, just because it's almost assumed right now that they're going to raise rates, and I'm not sure if that's going to give the market a spook, or is it going to? It all depends on how the algorithms are going to be programmed on what they're going to do. But even if there's a spike higher, again, all we're doing is waiting for that final wave to do it before the larger move to the downside. So the panic line was this 2350 to 2340. You can see we made it right in here, and then they found support and ran up. And now if they lose this, we're going to have a pretty quick drop down to the 2340 and most likely coming back down to the 2300. So let's take a look at our regular charts. And really the main thing I wanted to show you on there was the VIX and what's going on with it. So expecting a move to come down to the 50-day moving average. This is probably where buyers will come in, and that's at the 2312. So this will bounce up, and then if they take this out, that's when we're going to see panic come. And it wouldn't surprise me to come down to someplace into this the 2250 area. So this would be probably where this move would end once it starts. It hasn't started yet. And then they may pop back up, and then we have another wave down that probably will take us, further than a lot of people are anticipating. So that's we really just have to wait for things to, to top, and whether they have to come up and test it or break it. This is what this chart is telling me. These are the alt patterns. So we could have 1, 2, 3, 4, and this is just a big extended wave 5. Now the alternate pattern is you have 1, 2, and then this is a 3. Now we're making a 4, and we're going to make a wave 5. But again, like I showed you on the other charts, once this completes, it should set the highs, and from there we get the larger drop. And the way the S&P acted today, I don't know if they're going to try to run it into the into the Fed meeting or what they're going to do, but it's I just think that this move up from November, it's just on borrowed time right now. So if they do decide to try to bounce it, I would continue to just use the strength to build a short position, and then really just let time be on your side, because from there the drop should come pretty fast. So we have the 200-day moving average. That's at the 2341. This is that panic line. We haven't really had a break of that since this rally started in November. So this is going to be the first clue that something is changing, because we haven't really traded underneath that at all. So if it does, that's going to tell us that most likely this 5 is in place. And if it breaks, then we're going to get a quick move down to the say 2280, 2263. So there's some support that needs to be broken before the bears are going to have it, be able to start putting things into a high momentum on the downside. So here's the bulls. They need to get above this 2377. If they do that, they're going to have, probably get a pop up to the 2383, and then probably up to the 2388. They start going above that, then they're going to close this gap. You can also see this is a pivot line that you want to keep an eye on. So if they head up, this is going to be where the bears really want to defend. The bulls want to defend this line right here, and this is at the 2354 down to that 2340. And if they lose that, that's when you're going to start to see some people scratching their heads on it. So we're kind of overbought on the 15-minute chart here, and you can see we just, if I go to a 5-minute chart here and look, we really only made it up to a 50% retracement. So on the 15-minute chart, they've burned off the oversold stuff. We're now in the overbought levels, and we have some bearish divergences. So that's not really setting up well for, an extended move to the upside, because typically they go straight up and then start diverging when they're up here, and then grind it a little bit higher, until things roll over. But the fact that we just made it up to the 200-day move, the 50% retracement, and we're already getting bearish divergences, it's, something to keep an eye on. So really, it was a nothing day today. I think really the biggest news was just how bad they crushed volatility without any real moves in the indexes to the upside. And if they give you strength, use it to, continue to short. I think that, just the Fed meeting coming, we don't want to get aggressive on it, wait for something to break, and then we could, start jumping on. So, but you could definitely have some skin in the game with it, where if they decide that they are going to drop it, then, you're going to be able to ride with it. So right now, that's about all I have. I will talk to you guys in the morning, and have a great night.